Good afternoon, everyone. Assalamualaikum warahmatullahi wabarakatuh. Here, I, as your assistant, my name is Kanalidia Monica. I want to explain about the cash flow capital budgeting in the week 7, and this is the end of our meeting in this week before the midterm. Okay. I explain first about the investment outlay. Investment outlay that this is can be called investment zero or I0, namely that estimated cash flow be distributed to finance the investment proposal that occurs at the beginning at the period, or T0. And the second is operating cash flow, which is the estimated cash flow that will be generated from an investment proposal during the life in the project, and we can call that T1 until Tn. And the last is about financial cash flow or terminal cash flow, namely that estimated cash flow to be generated at the end of the project life, or Tn. So we know that here in the cash flow capital budgeting, we know that there are expansion or maybe replacement. So this is the example for expansion. Actually, the replacement is same, but maybe the difference is about if the replacement there are two kind of machine, and we get the replace. So for the first investment outlay, this one, we know that the first price of new asset we can minus, installation we can minus. Why this is minus? Because of this is investment outlay, something that we outlay, so we can assume that minus, our investment is minus. So price minus with installation, shipping, or modification cost. So this is the installed cost, or maybe in Indonesian is harga perolehan. So in next step is minus increase in NOWC or NOWC, or this is network operating working capital. It means that in NOWC is about the current asset minus with the current liability. This is the current asset, the example of current asset, and this is the example of account payable and accrual, example of current liability. And then we get the investment outlay. So the next is operating cash flow. We have a revenue, maybe in the question maybe no revenue, or maybe there are revenue, so it can be given, and then minus operating expenses. Please attention here, if this is minus operating expenses, it means that we use the expenses, or maybe we use the financing of expenses. But if here we have saving, or maybe expect to save, it means that the operating expenses is plus, because we got to save this one. Okay, the differences is like that because of the revenue and the operating, we get the net profit. So the next is minus with depreciation, and then we get EBIT, or earning before interest and tax, and then the next is minus with the tax. So look at this, if EBIT plus, the tax is minus. If EBIT minus, the tax is plus. So it can relate and between EBIT and the tax. And then we got the NOPAT, net operating after tax, this one. So plus with the depreciation reversal. depreciation reversal, it means that the the number, this one, the number of this one same with the number of this one. So the differences is this is plus, this is minus. Okay, and then we get the operating cash flow, just like that. And then for the next, about the terminal cash flow, for the first we know that the salvage value of asset, and then we know that the tax effect, or if gain we use the minus here, if loss we use the plus here. Because of if gain, the journal, if we have gain, we should put in the credit, right? And then if we got a loss, we put on the debit. So this is the reason why gain is minus and loss is plus for this one. And then for the next is recapture of NOWC. Sorry, NOWC. This is recapture. This is for this one. It's same with this one. The difference is if this one is minus, if this one is plus. So same with this one. So same with the depreciation. Same. And then we get the terminal cash flow like that. So for the next, this is number 2 on your exercise on learning. Okay, let's learning slowly and clearly because this is so complicated, I think. Okay, a company evaluating proposed acquisition of a new milling machine. The machine base price is 108,000. So 108,000, it means that machine price. So you should write the given like this. This is make you clearly to understand what is the given from the question. And then it would cost another 12,500 to modify. It means that this is the modification cost. Yeah, and then the life is 4 year. Life is 4 year, and the depreciation with straight line method. And then this machine increase in net working capital, increase NVC or NOVC, it seems, is 5,500. So for the next, the machine will have no effect on revenues, so we don't have the revenues here. Maybe this is a new machine, maybe this is a new investment, we don't have the revenue. So the expected to save the firm is 44,000 per year before operating costs and excluding depreciation. So look at this one. Please pay attention from this one. If you know the question, if you know the clue of the question, expect to save, it means that this is operating expense. So if you have our expect to save excluding depreciation, it means that operating expense with plus or maybe saving. If you know that the expect to save including depreciation, it means that EBIT plus. So it could be operating expense, it could be EBIT. And then if you have the clue in increase operating cost, it means that minus. Like this. So please attention with this one. Okay. And then the tax rate is 30%, and we have the market value is 10,000. So for the first, we have to calculate investment outlay first. This is the easier one. So we get the price of new set is 108 from this one, and then the installation or shipping and or modification. So we have here we have a modification cost here, so we can put the 12,500, and then we get the installed cost here. So the installed cost here is, it means that this is the calculation here to calculate the depreciation. It means that ini adalah harga pokok perolehan yang kita buat untuk menghitung depresiasi. installed cost. So the increase in OWC is 5,500. So, and the result is 126 minus 126,000. Okay, this is easier one. And then for the next is about operating cash flow. Operating cash flow, we have a given that revenue is no effect here, so we don't have the revenue. If you have calculate the operating cash flow, you should take the year 1, year 2, year 3, and year 4, because this is the life is for year. So we should know the operating cash flow per year. Okay. And then for the operating expense, why this is plus? Why? Because including for this one, expense to save excluding depreciation, it means that operating expense plus. So this one plus 44,000, and then depreciation, we should calculate depreciation first. This is, you look at this one. Okay, this is the installed cost, that in the first investment outlay, and then the rate is 25%. It means that from 100% divided by 4 year, because this is for 4 year, and then we got the 25%, and the depreciation is times with 100 and 120,500 times with 25%. The result is 30,125. 125. Sorry. And then we got the result here, minus depreciation, it will be minus here. And then EBIT, earning before interest and tax, we can sum this one, and then the result is this one. And if we have the EBIT plus, so we can assume that the tax is minus. Okay, the tax is minus. This is minus with the tax rate, this is 1, and then times with the EBIT, this one. Okay. Okay, and then if we have the calculation this one, we can get the NOPAT, net operating after tax. Yeah, so we can assume that, sum that, and then we got the depreciation reversal. So this value from this one, the differences is this one minus, this one plus, like that. It seems year per year, it seems. So we get the result, operating cash flow is 39,838. Okay. And then for the last, it's about terminal cash flow. Terminal cash flow, we know that the salvage value or market value, if you know that the market value on your question, it means that the salvage value of asset. Okay, 10,000, and then tax effect gain or loss capital. We know that here we can calculate from salvage value minus by book value times with tax, and then the result is 3,000. So we know that 3,000 is positive here, so we got a gain. If we got a gain, we should put here to be minus. Okay, if we got a gain, we should put to be minus. If we got a loss, we should put to be plus. Okay, I hope this is clear, guys and girls. And then for the next is about recapture NOWC. This is from this one. The value is from this one. It's from investment outlay in the minus NOWC. But here is plus. Okay, and then we got the value terminal cash flow. Okay, and then after this one, Please do this exercise. Please do this exercise with the Excel format. So I want to up this one on your Google Classroom. So you should do the exercise one. Okay. Please do with the step like I used for this Excel. Okay, and the next is about replacement project. Replacement project is same. I think that the differences is about the machine. We get replace old machine with a new machine. Okay, so this one to calculate same actually. This is for the differences. We know the depreciation new machine with old machine, and then for the next we get the terminal cash flow is literally same. Okay, let's on the example. This question, the given is price old machine 100 million, and then the life is 10 years, and the depreciation is straight line method. To be zero, it means that we don't have the residual value. Kita nggak punya nilai sisa, jadi nilai sisanya adalah 0. So the new machine we get the price 90 million, and then installation is 12 million, and the life is 5 years, and with residual value is 5 million. For the new machine we have residual value, and then estimated to sell is 56 million, and then the additional NWC is 10 million, and the tax rate is 12%. So for the first, we want to calculate investment outlay. The price of new asset is 90 million. 90 million is from this one, 90 million. And then installation cost from this one. And then net price of, so we get the installed cost like this. So for the next is we have a new price of selling old asset. This is 56, this one, 56. And then we get the gain because of we should calculate first for this one. If you want to calculate book value, the step is this one, HPO, or maybe this is the price of old asset. HPO-nya mesin lama 100 juta minus with 5 years. 5 years is from this one, the life of the new machine, and then times with the 100 million divided 100 million, this one divided by the years of the old machine. So we get the result 50 million. And then we know that the sale is 56 million. We should minus with the book value, and then we can times with the tax. So the result is 1,500,000. And then for the next, we know that the change of NOWC is this one. So the initial outlay is this one. Okay. And then for the next, we know that the replacing the machine increasing sales is 25 million, and then the increasing operating cost is 5 million, depreciation is 5 years, and the residual is 5 million. So we know that the increasing selling, this is same from the T1 until T5, increasing 25 from the given, and then this is the increasing operating cost from the given minus, because this is increase, so we get the minus. And the depreciation, this is from the calculation of depreciation, installed cost minus with residual, and then divided by years. Okay, so the increasing this is the increasing. So kalau kalian menghitung depresiasi ini adalah selisih. Ya, selisih yang harus diminuskan. Jadi, next, we know that the EBIT like this one, sum all of this, and then we get the 8 million, and then the tax is this one, 2 million. Tax is the percentage times with 8, and then the depreciation reversal, this is 12 million from this one to be plus, and we get the operating cash flow. And then for the last explanation, my explanation, this is from the terminal cash flow, or maybe the end of cash flow. We get the life and new sales is 7,500,000. So we put here selling price new machine, and then we can minus with the tax. The tax is same, 7,500,000 minus with the book value residual times with 25%, and then we can recapture NOWC. This is from the first NOWC. This is 10 million, this one, and then we get the value of the terminal cash flow like that. So the differences, this is in Indonesian version. You can look at this one, and I want to upload this Excel on the Google Classroom. You can look at the Google Classroom, and then if you have any question, please write on this comment, this YouTube comment, and then you can give your ID number and name, and then you can ask, maybe you can answer. It's up to you. Okay, I want to give you exercise for this one. Please do this one, and then the limit is tomorrow. Okay, thank you. Wassalamualaikum.